Yeah, go for it.
Okay.
The broadcast is now starting. All attendees are in listen-only mode.
Hi, everybody. This is Amy Mann here at LawPay, and we're so excited to welcome you to the first of our October accounting webinars. Today, we are joined by Micky Deming. Micky is the Director of Business Development for Kahuna Accounting, and Kahuna has been a great partner of ours for a couple of years. This group works with a ton of attorneys. They really understand the specific challenges and needs that legal professionals have. And so we love working with them and have gained so much valuable insight just into helping attorneys run better businesses, project cash flow better, and get great systems in place to make them more successful. So we're so thrilled to have him here. We're actually going to turn this over to Micky and let him talk through some financial habits for success. And at the end, we'll have a few minutes for Q&A. So if you have any questions, feel free to enter those in and we'll pass those along to Micky. So Micky, the show is yours. Take it away.
Awesome. Thank you so much, Amy, and I appreciate that introduction, and I love it that you're doing an entire month of webinars on accounting. I think that's exactly what the people want, is accounting webinars. So this is fun, and I appreciate you saying that about being a great partner, because I will echo that and say LawPay is awesome, and I'll talk about that a little bit in this webinar, not because just because you're here with me, but because it's true. So thanks again for having me. I am going to talk about financial habits for success and how to build a financial system that is simple and makes your practice stronger. So I know that for law firms, this subject of accounting can be just not a fun one to tackle, and it can be challenging and it can be difficult, not necessarily because it's so confusing, but just because it often gets mixed up. And so we're going to talk about how to simplify it. So that's kind of a key word. All right, there we go. So just to reiterate that, what to expect here, I'm going to show you how to have an accounting system that you don't hate and actually helps you grow your law firm and achieve your goals. I know that with accounting, it's not only sometimes difficult, but it can be really, really frustrating. And that frustration is not only important because we are better in our lives when we're not frustrated, but it also is important because the frustration can cause attorneys to neglect it and to not prioritize it. And that can actually have some detrimental results on the firm. And so our goal today is to show how to simplify this, to actually make it something that is easy to understand and you don't hate, and can actually be, in fact, a little bit motivating and helpful for you achieving your goals. So let me introduce myself a little bit more, even though I got a great intro from Amy. This is the picture of my family. I feel like a lot of people do that, and so I just threw it in there. And also, I think it's funny because it's always weird doing these webinars because I don't see anyone, and so I'm just talking to a screen, and I'm hoping that people are listening. I know you probably have like 7 or 8 browsers open at the same time, but I hope that you occasionally will scroll back to the screen, because what I'm saying is very important. But I put this up specifically because I want to talk about my lovely wife there, and she has a business that is teaching fitness classes for ladies, and she started it about a year ago. So it was October of last year. And so she started it, it was small, and then New Year's Day, she put together an event because, you know, it's fitness, it's New Year's, like everybody come and we're gonna do this cool thing. So a bunch of people came on New Year's, and then right after that in January, her membership went through the roof. Like it was like everybody that came to this event stuck around and kept coming. And so we were like, oh my gosh, this business is taking off, this is crazy. And so I started talking to other people about it, you know, saying, you know, my wife's doing this fitness thing, it's working well. Like, what's your experience with fitness businesses? And they said, don't get too excited because it's January, wait till March and you'll have, you know, about 1/5 of the amount of people. And I was like, don't be a buzzkill. This is, we know, we got this figured out. This is going to be amazing. But come to find out, a few months later, most of the people stopped coming and it all kind of died out. And so we've seen that before. You know, everybody kind of makes that joke about, New Year's resolutions and then not following through. But what I want to point out is when you think about fitness and you think about health, like how often do you see people or even ourselves where we have a goal of what we have in mind and then we have a reality, and they're two different things. And it's hilarious because now that my wife has this, when she sees people that know what she does, they feel like compelled to give reasons why they're not in shape. She's like, I didn't ask about that, and so they'll kind of want a diagnosis, like, oh, I've got this kind of arm fat here. Can you help me with it? And she's like, that's we're at dinner. We don't need to talk about that right now. And it reminds me of the conversations I have with law firms. So to bring this full circle, what I do is I'm the director of business development at Kahuna. We have over 200 clients all over the country, and a majority of those are law firms. And so over the years, I've had a lot of conversations with law firms about their accounting. And so you can imagine I've seen pretty much everything. People that are in a complete mess, people that are decently organized, but they need to get themselves out of it. And in seeing that, there's some similarities. Like there's an image in mind of what we want, and then there's reality of what's actually going on. And so today, I'm going to dig into ways that we have seen people make this work really, really well. So imagine this world for a second, that you don't have to stress or worry about tax season. I know this comes up this time of year for everyone, sometimes because it's from an extension from the previous year, and sometimes because you're starting to get things organized for the end of the year. But for most attorneys, tax time is very, very stressful. Imagine having the finger on the pulse of the business and where it's going. So in real time, knowing where you stand and knowing where you're going. I'm going to get into a lot of specifics about what that actually looks like. And imagine not being stressed about cash flow or making payroll. Obviously, that's the most important thing in our businesses to make them succeed, is to be able to produce cash flow, to grow the business, to invest in things that are working, and build up a foundation for success. Can you imagine that world where you just feel confident about these things and you know what are the key levers, the key priorities that make that happen? I'm going to talk through what that looks like when you get that in place. So the goal of this today, because I know that the immediate thing that comes to mind in these conversations a lot of times is this sentence that I'm not a numbers person. Like, I've tried this, I want this, I'm just not a numbers person, and this always becomes a headache. And I want to explain that the reason why it hasn't worked in the past is probably not because you're not a numbers person. It's probably because of the way things have been set up in the past or some of the advice you've been given. But that's not the goal today. You can be a non-numbers person and still get a lot from this and still get a financial system that works for you. The goal is for numbers to be a clarifying guide to take your law firm where you want it to go. So again, we have this picture in our head of where we want our firms to go, where we want our business to go, where we want things to go in our lives, and then they don't happen. So what our goal is to create a financial system that helps us get there. And that's what can be done. And so the goal isn't to be a numbers person. The goal is to get that system in place, that clarity to guide your firm to where we want it to go. How does that happen? So there's really three components to this, and we're going to break them down each one by one. The first is to simplify the system. So this is the problem. It's not simple. It's complicated, and there's a focus in accounting that often has nothing to do with anything you care about. It's stuff that doesn't matter. So we need to simplify it, make it digestible, and make it actionable. Then focus on what matters and get results. So once it's simplified, it's all about focusing on the things that matter, not a bunch of things that don't matter, and the things that actually drive us to where we want to go. And then third, and I wasn't sure really how to word this, but what I'm thinking is kind of the title of this whole presentation is to act like a financial pro, to build the habits of success. And I'm going to walk through specific examples of what people that are, just like you, just like the firms on this, what they do so that they know their numbers, so that they use their numbers to help them grow. And we're going to take through each of these one by one. So let's start with number one. Start with simplifying. And this one actually I'll spend the most time on because it's where it's by far the most important. To use 80-20, I'm talking about the 80-20 principle, where 20% of your effort generates 80% of the results. And that's really how this gets messed up, is we make it too complicated and we never get into a system that works. And so therefore, any of the cool things you want to do with accounting, which sounds like an oxymoron, but there are some cool things you can do, none of those can ever happen if you don't even get a foundational system in place. And so we're going to spend a lot of time here figuring out what that looks like, and then at the end get into more of like what happens when we focus, what happens when we set up a process that drives toward goals. So to understand how to simplify it, I think it helps first to really dig into where we go wrong. And so this is the part of the webinar where I'm going to be more like a counselor than a presenter, and just kind of talk through some of these common challenges that I've seen over and over again, and the problems that they create. So for many firms, they have no idea what their cash position is. We use the bank accounts to see where we are, but that does not take into account money that's about to come in, bills that are about to go out, and that can be a dangerous game to play when you don't know what your cash position is from day to day. And we're going to talk a lot in depth about how to get a handle on cash flow and even to drive more of it forward down the road. Most firms, I talked about this before, but most firms dread tax time. It's a nightmare. We hate it. We have to file extensions. We have to dig through and remember what was that transaction that happened in March of last year. I don't remember. This is such a pain. I just want it to be over. That's how we approach tax time, and it's a nightmare. Successful businesses don't look at it that way because they can actually use tax time, use their numbers to drive them forward. And so I want to think about that today, like how do you reframe the whole financial system to use it to your advantage and not just dread it and make it a necessary evil that is something to be avoided. Playing into that concept is most firms are looking backwards, playing catch up, and wasting time. I mean, I think that's probably the most common thing I hear is like, it's just wasting my time on stuff that's not worth my time. I'm entering data, I'm dealing with spreadsheets, I'm dealing with these systems that don't work together, and it's all reactive, and it's all looking backward, playing catch up, and that's a horrible use of your time. And so when you take all this together, it's absolutely logical why I said at the beginning that most law firms hate this subject. Like, we don't want to deal with accounting because it's such a nightmare. It doesn't have to be this way. So here's an example of how we were talking before about how we say what we want and what really happens is totally different. So we put up a intake form on our website where we just gather basic information, and we recently tweaked that where we started asking what is your current monthly revenue and where do you want your monthly revenue to be 12 months from now. And it was hilarious because we did that, and 99% of the people that fill it out, they say that they want it to double, which is it's a very good goal. It's very aspirational, and there's nothing wrong with that. But what was interesting is when we started having conversations, most people had no idea really what that meant, like what it would take to double their revenue, or did they double the revenue from the previous year? Like, they didn't have that information, but that was kind of the idea in their head that they wanted. And we had an example of a law firm, and this was a few years ago, but it always sticks in my head as just what can happen when you don't run your business by the numbers, where a law firm had filed an extension. So imagine, this is 2017, and it's September, and we're working through taxes from 2016. So she had filed an extension and finally got her tax return done. When she got her tax return done was when she actually was able to understand the results of what had happened in 2016. And guess what? What she found out hit her like a ton of bricks, and she was like, oh my goodness, my revenue is down 20% from the year before. So think about what's happening in that situation. So this happened a few years ago, but imagine it's right now. So October of 2017, I'm finding out what my final revenue was for 2016, and I discover that it was 20% less than what happened in 2015. So there's several problems here. Number one, that's pretty bad to find out how you did in 2016. Number two, we're already 75% of the way through 2017, and you haven't made any adjustments. So guess where you're probably going to be And number three, you have never had any chance to make any adjustments or make a change. And so this is where there's a disconnect, where people say, I want to double my revenue, but they also aren't aware of what's even happening in their business day to day, and they're finding out way, way, way after the fact. So how does this happen? How do we get off track? Well, one thing is the world, and I'm going to go really fast through these just because we don't have time to dissect it all, but in the world of law firm and really the way cloud has taken over, it's been a great thing. But what happens is we're starting to have, everybody has a bunch of systems. We have a system for practice management, we have a system for accounting, we have all these different things that we're trying to work together, which is great. But what ends up happening is none of them are working together. And so you have your practice management that's telling you one thing, you have your accounting that's telling you another thing, you have your bank account that's telling you another thing, and it all becomes this disaster. The problem is it never, for most people, it's never set up properly to begin with. So you have these software tools, and you never have a firm foundation where things are feeding together properly, pulling data together properly, and being managed in real time so that they all match each other. And so once it becomes off track in the first place, it stays off track and it never becomes relevant information, and it becomes a challenge. It becomes looking backwards, and it becomes meaningless for the attorney. And so what happens when it becomes meaningless? We shut down and we ignore it and we focus on other things. The other thing is, it's often, and this is the feedback I've heard many times, is like it seems like accountants and attorneys, or even accountants and business owners, speak completely different languages. So I think most of you out there probably have a CPA, and a CPA is focused on completely different things than what you're focused on. And that's not a knock on them. What they're trying to do is take historical information and compile that so that you can get your taxes done. That's their goal. Your goal is to build a successful practice, to maybe hire another attorney, to add more profits, to take more money home. Like, those are your goals, and they're not aligned with the accountant's goals. So the accountant is going to talk about balance sheet, profit and loss, what was that transaction from back in May, and it's like a different language. And so when you put all these things together, you start to understand, like, how is my financial system helping me to get to what I want to do, and it becomes almost meaningless. The other thing is the day-to-day transactions. So I talked about how it gets off track in the beginning because it's never set up properly and you've got these different systems. The other thing is we often don't play to our strengths, and we put people in situations that doesn't set them up to succeed. So 99% of the time, these are the options that we see. The attorney does their own bookkeeping, the paralegal does the bookkeeping, the attorney's spouse does the bookkeeping, an office assistant who's not really an expert in accounting does the bookkeeping, or you bring in a part-time bookkeeper who may have some of those accounting skills, but they probably don't know your practice management system. They probably don't know the accounting system. They don't know how to integrate the two, and that can become it can become very difficult to find someone who has all of those skills and that you can train, that you can manage, and that stays on track. And so these are the kind of the cycle that most firms work through. And so when you combine these two things, I'm sorry, this will get positive in a second. I'm being really negative right now. But when you combine these things of the systems never getting started, different languages, and then the people that are kind of in the wrong role, it makes sense why it becomes such a problem. So what I want to do now is take a deep breath, and we're going to try to simplify this whole thing. So I know everything I just said probably seemed true, and because I hear it every day from law firms. So let's not just focus on the negative. How do we solve this? How do we make it better? And so this is a quote that I found that says, to attain knowledge, add things every day. To attain wisdom, remove things every day. So the ultimate goal is to remove things, to take things away, to make things more simple, and then we can actually start to make some progress and get somewhere. So here's what accounting is for most people, for most attorneys, for most law firms. It's just this blurry mess of numbers and columns, and we hate it. Like, what is this? How does this help me? What does it mean? None of it means anything. Like, what should it be emphasized? What matters? So like when you get your financial reports, this is what you get. And so it's not motivating. Like, this doesn't help me. This doesn't help me get to where I'm going to go. So I'm going to ignore it. So here is the simple financial system. So again, we're going to go through this quick, and we'll get into some more specifics down the road. But for now, I want to just do a high-level overview of what a simple financial system looks like. The first thing is that your bookkeeping and data entry should be on autopilot. Like, there's technology and tools that are available today so that things can sync together, can pull data from different systems, that you should not be having to waste time on minutia and detail getting information into the system. That can be easily outsourced or easily integrated. The second is you should have reports on demand. So like we were talking about with the example of the firm who was finding out basically 18 months after the fact how they did the previous year, you should know at a glance in real time where your position is, where your cash is, where your profitability is, what's going on in the firm. You have a clearly defined position and destination. We're going to dig way into that down the road. But most people not only don't know where they're going, but also don't even know where they are right now. And so that in a simple system is clearly defined, and you can't get there until you have that data entry, bookkeeping, reporting taken care of. And this is where we started to get into the powerful stuff. So like I said, it starts with the foundation. Once you have the foundation, you can start to do some interesting things that actually help you drive. But you can't do any of those things until you have the foundation. So once you have that set out, you have a defined position, defined destination. This is where the simplicity comes into play. So with a lot of people, you get the financial reports, and like I showed in that image, it's so many numbers. But like I said at the beginning, the 80-20 principle, for you to get where you want to go, and for you to achieve what you want to achieve, and for you to succeed, there's probably 3 to 5 key numbers that are going to really matter, that are going to really determine whether or not you get there. Like, you want to be tracking everything, but you want to be relentlessly focusing on 3 to 5 key drivers in real time that are going to determine whether or not you're on track to getting where you want to go. Then you want to have forward-looking projections. So you take where you are, where you want to go, you identify what are the key drivers by looking backwards, then you want to actually look forward. And so if you say, I want to double my revenue in 12 months, then let's build a model to see what that would look like, what would have to happen. And it can be a lot of assumptions. It's not going to be like a prediction of the future, but you should be able to project that out into the future, and it's not that hard to do this. So don't get overwhelmed, but this is just an overview of what the simple financial system looks like. You can look forward and project out where you want to go based on assumptions, but then that gives you the ability to have real-time accountability. So when a month goes by, what's the assessment for, are things going well? For a lot of people, it's kind of a guessing game. So when you have your defined position destination, you have your 3 to 5 drivers, you have forward-looking projections, then you can have real-time accountability on whether or not your 3 to 5 key drivers are working. They're not always going to work. They're not always going to be exactly what you want them to be, but this gives you the ability to adjust quickly and to make changes and see what's working and what's not, so that you can build the firm that you're trying to build. And this is really the answer for creating what you want to create. And it's like, goes back to that fitness example. Like, why does that happen? Like, why do we have this goal in mind, but then reality doesn't match up with that goal? The reason is because we don't have a plan that's simplified, that is easy to follow, that gives us accountability. And if it's just this broad goal, if I want to be better, there's no way to track that. There's no way to be honest with that and to make that actually happen in reality. So that's the simple financial system. That's how you simplify it. And then once you have that financial system in place and that foundation in place, the power really comes in when you can focus in like a laser on the things that matter. So just to recap, the simple financial system, you guys can see it all there. We've covered this in detail, but you have everything on autopilot. Everything's in real time. You're looking forward. You have accountability. And you can adjust and optimize so that you make sure you get to where you want to go. So this is kind of the framework and the progression for getting to that point, and for especially getting to those middle sections of that. where you start to focus in and you start to really take control of your firm, especially by doing it by the numbers. So the progression here is, first you confront your financial reality, and so I'm going to get into that in just a second. Then you create a safety net. So you start to explore profitability, you explore cash flow, so you can have confidence that your firm's viable. And then once you have that, you grow and enjoy financial success. You project in the future, you make adjustments. So everything I shared in that simple system is not going to happen in one day. But that's the goal. That's the big picture of it all. Step one is to get the foundation in place, and then you kind of make this progression to where you can actually grow the exact firm you want and do the things that you want to do, whatever they may be. So let's start with confronting financial realities. This is the brutal honesty section of this presentation, because I think for many firms, this is something that we prefer to just ignore, or prefer that it would just take care of itself. And everything else that I've talked about is impossible until you confront the reality of the actual situation you're in. So you have to know where you are now. You have to be able to be real about the system you have. Is it working? Is it not? Are you financially where you need to be? And to do it with data, not with anecdotal evidence, but to do it with data. And for many entrepreneurs, this is the part we skip, and so we never get to that point, because like everything I shared at the beginning, there's so many things working against you. So I hope you hear this brutal honesty with a hint of empathy, because I do have that empathy. I think there's a lot of attorneys that are dealt a bad hand because the systems they get in, the setup they get to begin with, that is true, and a lot of things are working against you. But the reality is, what do you do about it? Do you assess that and make an adjustment, or do you just say, you know what, it's messed up, I hate this, I don't want to deal with it, and move on? And so the true way out of it is to confront the brutal facts. So I already covered this, but I'm not a numbers person, won't cut it, because you don't have to be. You just have to put the right systems in place and have the right focus for your firm. So here's some discerning questions. These are some questions that I think will help to do that assessment, to do that reality check of where you are. So the first one being, how many months of cash are on hand right now? So if things were to slow down, if things were to go unexpected, how long would your firm be viable? How long would you be able to meet obligations? What type of situation would that be? For many law firms, they don't know, and that's you can just understand that that's not a good thing. Like this is something you need to be aware of. Where do you expect to be in 6 months, or what do you expect to happen in the next 6 months? For many, I think it's just repeating the same activity over and over again, and that's why I come back to that example of, I want to double my revenue, this year versus last year. That's a big jump. So, I'm assuming if that's what you're saying you want to do, that you're going to make some dramatic changes, you're going to make some adjustments, you're going to do something different. But when you talk to a lot of businesses, you talk to a lot of law firms that have that goal, their answer is, I'm basically just going to keep doing what I've been doing. And so you have to be, like I said, you have to be realistic with yourself about what you want to happen and what you want to do and what decisions you need to make in order to make that happen. And the other question, that we've kind of touched on is, how simple or painful has tax season been every year? And as we head into October, are you starting to wake up in the middle of the night, or get nervous as you think that the end of the year is approaching and this is coming? How do you respond when you think about that? This is a good kind of discerning question to help assess the current status of your situation, the brutal reality, the brutal facts of where things are. If it's a nightmare every year and you dread it every year and you're filing an extension every year, it's probably time to take a look at this and see how to simplify things so that it becomes a whole lot simpler and takes a huge headache off your plate. So let's talk about cash flow. So a friend of mine who's also in Austin, just like LawPay, and who put out a book recently, his name's everything. Well, that's not the point here. The point is that whatever it is you want to do, if you want to grow, you want to make more of an impact, you want to build a team, all those things come back to cash flow, because cash flow is what keeps your business going. It keeps the firm viable. And so when we get into this financial system, and I'll recap kind of where we started. We want to simplify it, then we want to focus, then we want to build habits for success. So when we get into focus, every firm is going to be unique. Like those 3 to 5 key drivers are going to be unique for every firm. But no matter what, cash is always going to be king. Cash is always going to be the key, because cash is what allows you to have some confidence in your business. It allows you to invest in your growth. It allows you to invest in your employees and make them, feel glad to work with you. It allows you to make a greater impact on your community, on the people you work with. And it allows you to take more home to yourself and to your family. It all comes down to cash. If your business grows and your revenue, doubles, or even if it goes 10x, but you're not taking more cash out, if your expenses are also going up just as at the same rate, then you're not getting anywhere. You're not going anywhere. And so everything comes down to cash. And a lot of law firms are not really tracking their cash, or not aware of what drives it. And that's just going to create a nightmare and a headache for you, because the cash is really what's going to determine whether or not you succeed. So just to recap that, you confront the financial reality, create the safety net, and that's where we get into cash, where we pull cash out, we are aware of what's driving the cash, and then we're able to grow and enjoy financial success. And it all goes back to cash. And so let's talk about cash flow and some very practical things you can do. I'm optimistic. I think just from this webinar, you should be able to take more cash home to yourself. So I know it's a bold promise, but we're going to go into some specifics about what that looks like. So this is the key to breathing financial life into the business. So number 1 is to simplify. Number 2 is to focus. And when you focus, it really comes back to cash flow and generating more of it. And so I'm going to talk about some very specific things you can do right now to generate more cash flow. So step 1, so I'm just going to cover 3 things. So the overview of what I'm going to get into with cash flow is 3 things. Number 1 is understanding profitability metrics. Number 2 is converting your accounts receivable to cash. So getting the cash in the bank rather than just build out, and then projecting cash flow into the future. So let's dig into the profitability questions. These are some questions that not many law firms know off the top of their head, but is something you can start with and something you can dig into. So these are some questions you should know, and when you do, can be very, very powerful. 1 is, how much does it cost to acquire a client? So you're spending some money in some form to grow your business on either marketing or on some type of sales expense, or in some fashion you are spending money with the goal of acquiring a client. And a lot of people, the old saying is, half of my advertising spend is wasted, I just don't know which half. Well, today it's a lot easier to track. And if nothing else, you can ask your client, how did you find out about me? And so what you can start to do is build out a cost per acquisition. What do you want it to cost to acquire a client, or what is it costing you? What's your marketing spend? How many clients are coming through, and what's working? Because what happens is once you start tracking this, you'll realize, wow, these few things are working and everything else is not working. And you can start to add your profitability by investing in the things that work and killing the things that aren't working. The second thing to ask is, how much does it cost to deliver your promise to a client? So how much in terms of billable time, how much in terms of contract services and expenses? What does it cost to deliver your promise so that you can maintain that profitability? And then what's the lifetime value of a client? So a lot of times, and I know law firms have a wide range of different ways of getting paid. Some are transactional, some are flat fee, some are contingency, and it's all over the board. But in general, you are being paid for a service, and the engagement you have with the client doesn't just end there, because they may make a referral, they may provide a testimonial, they may come back for more services. And so there's a difference between how much they pay you for one specific engagement and how much money you earn over time. And so you start to understand what's that lifetime value. Like, I can understand that if I spend $500, it gets me one client that's has a lifetime value of 10,000. Then I can start to pour gas on that fire to grow my company. And that's where it helps to know, what does it cost to deliver? So do I need to add a team? Do I need to add staff? Can I continue to grow this, or does it make sense to kind of stay where I am right now until I develop some of these marketing channels, or get the cost of acquisition down? These are some key questions that once you have a handle on, you can get very, very clear and specific on what it would take to grow the business. The second thing to do, and this is a whole lot simpler than that, is this is actually really, really simple, and you should be doing it, is to turn your invoices into cash. Because cash flow, like I said, cash flow is king. And when you are doing a service, you send out your invoices, and for many people, you're not getting paid until 30, 60, 90 days down the road. And this accounts receivable can really add up. And what's key is when you can collect that almost instantly, it allows you to have the cash and put it into the business. It saves you a ton of headache of collecting, and allows you to have more of a clear picture on your cash position, which is what we talked about before. So here's some things you can do to make sure you're turning your invoices into cash. Number one is get the invoices out, get the bills out. This one is actually surprising to me. So there's a lot where I actually said, I have empathy for you guys, and a lot of attorneys are dealt a bad hand, and I understand why things break down. This one, getting invoices out, I don't understand. Like, if you do nothing else, if you're doing work for someone, get the invoice out to them. It's mind-blowing when a firm has a bunch of invoices piled up that they need to get out, because it's pretty self-explanatory, but the sooner you get those out, the sooner you get paid. But it's also a better experience for the client. Like, we've all been there before, where you get surprised by an invoice that oh, I forgot about that. Well, even though you still owe it, it's still kind of frustrating. Like, gosh, I forgot I owed that. Get the invoices out. Get them out ASAP. Is going to help you have better cash flow. Then you need to track your accounts receivable in real time. So once you get them out, you should have a system that says, I have an invoice out that needs to be paid, and that it doesn't get checked off that system until the money comes in that pays it. And so then you have in real time a picture of who owes you money, how long has it been, and how much do they owe you. You can also, with the right tools, automate the follow-up. So if your system is tracking that, then every 30 days or every week after 30 days, it can automate and remind them. And then, just because I am so happy to be on this, and this is so important, accepting credit cards is big. So I know a lot of people hesitate because there is a fee. So if I get a check, there's no fee, I get all the money. If there's a fee, then I get a little bit less. But as we have this conversation about cash flow, I can tell you it's worth the fee to get the cash in. So when you accept credit cards, and so we're huge fans of LawPay, and it's pretty clear this is LawPay's webinar, but we use it ourselves. We use it for our clients. And LawPay has a phenomenal reputation in the law firm world. And why is because they're separate. The one thing that is equally important, well, probably not more important than the trust accounting, but very, very important that LawPay provides, is the ability to get cash immediately. And so when you send invoices and you have a pay now button from LawPay, they can pay immediately, and statistics show that this reduces your accounts receivable dramatically. I don't have the stats with me, but it's huge. So when they have the ability to pay by credit card, you get the cash in your bank right away, which allows you, if you know your cost of acquisition, you can quickly invest back into other marketing efforts to keep yourself growing. So I think everyone should be accepting credit cards, because not only does it get cash into your bank account sooner, it also reduces the headache of collecting, of dealing with people that you have to keep following up with. It also creates a better experience for your client, because the client then can just do it right away, and they feel like, oh, this is very professional, this is very good. It's such a good thing to do. It puts more cash in your bank. And so these four things all tied together equal a huge boost in the cash flow in your firm. It's way better to have cash in your bank account than sitting as accounts receivable that someone owes you and that you have to keep calling them and asking them about. So that's part two. Part three in the cash flow is to look into the future. So we've already hit into this, but when you have a good handle on your profitability metrics, when you're starting to get good at bringing cash into the bank, the third thing to do to drive cash flow is project into the future. So 99% of law firms are looking backward. What if you could look forward? Like, what if you could say, this is where I am now, this is where I want to be, and then these are the key levers that are going to get me there, and then I have real-time accountability. This type of focus is what phenomenal businesses do, so that they can, when they get to the end of the year, they're not surprised. Like, they already knew what was going to happen. Like, the whole model of always looking backwards or working with your accountant and seeing what happened last year really just doesn't make any sense. Like, I flew last week from Chicago to Phoenix, and if like we were halfway there in the air and the pilot was looking back at Chicago and reviewing what that takeoff was like, I'd be a little bit nervous. Like, where are we going to end up? And so for you, you're going forward. Like, whatever happened in the past has already happened. You use that information, but what you want to do is look forward. Like, where do I want to go? What do I want to happen? And what needs to happen for me to get there? And then when you have the real-time financial reporting and the simplified system we talked about before, you can in real time start to make adjustments. Oh, I'm a little bit off track. This needs to change. Oh, this campaign didn't work. I need to try something different. You can actually make it happen so that your cash flow is not only something you're tracking and aware of, but you can actually drive it. You can actually be intentional about creating more cash and more value and more opportunity for your own firm. But you can't do that if you're only looking backwards. If you're looking backwards, you're always going to be reacting. If you're looking forward, you can actually make adjustments in real time and create the firm that you want. So this is a lot, but just to kind of summarize this piece of focus and to this piece of cash flow, there's three things that I think you can start on right away: is understanding profitability metrics, converting your AR to cash. And I would start there because it's the easiest, and project cash flow into the future, which does get easy once you have that foundation in place. If you don't have that foundation we talked about before, it's never going to happen. And just to recap what happens when you focus: you confront your financial reality, create the safety net, and start building cash flow. And then you can grow and enjoy. This is where you start looking forward. This is where you can be intentional. So this is like the summary of what that means. When you focus, create the financial system that you don't hate and that you love, and that works. So for part three, I want to kind of step back a bit. So if step one with simplifying was more strategic, step two with focusing was more tactical, I know it can get overwhelming because now we're getting into the weeds, we're getting into the accounting, and it can get overwhelming. And so this is where I want to just zoom out and think about what are the financial habits that the pros use, that people that have this figured out are doing to become a better business owner, to become more confident, and to not shut down when they get into these situations. And we've seen it. So at Kahuna, we've been able to work with attorneys that are doing this, that are thrilled, and that are growing, and that are aware of their numbers. So it's not a unicorn that can't happen. Just to recap at the beginning, our goal is for numbers to be a clarifying guide to taking your firm where you want it to go. That's our goal. Our goal is not to make you an accounting expert or to understand the difference between debits and credits. The goal is to have a guide, to have a vision, have a roadmap for where your firm is going, and to have clarity on what's happening. And how we do that is to simplify, focus on what matters, and act like a financial pro, which we're going to get into now. And I add there, even if you hate numbers. So I want to just reiterate that. How do things happen? How does change happen? How does a habit change happen? We hit on this a little bit at the beginning with the fitness example. So what most people do when they want to make a change is they jump right to behavior. They change their behavior and hope to change their results. And so if I want to get in shape, I am going to make a New Year's resolution, and I'm going to show up for the gym right off the bat, and I'm going to start working out. Well, I've changed my behavior, and I'm going to start getting some different results, but I haven't changed my thinking pattern. And so what ends up happening inevitably is after about 6 weeks, or a lot of times less, the behavior momentum wears off, and I stop, and then I don't get the results that I want. What you have to do to make a change in anything in fitness, if you quit smoking, if you want to have a financial system that works, is to change your thinking, then change the behavior, then change the results. And so here's I just heard this over the weekend. I was like, I'm going to use this all the time. Korean proverb that says, if you're drowning, don't blame the water, which is just packed with wisdom. But what that's saying is, like, if you're drowning and you're underwater, like, getting mad at the water in your current situation doesn't do you a whole lot of good, or to be frustrated about what's going on right now. It's not going to change anything. What you can do, though, is realize, like, what got me there? Like, how did I get into this position in the first place? And this is very relevant in terms of the accounting system. Is like, okay, you're drowning. You've got a system that's broken, doesn't make sense. You can, blame the water and be frustrated, or think through, like, what are the things that got me there? So we can start to, like I said before, change the actual thinking that leads to the behavior that leads to the results. And I think for most law firms, the thinking is flawed when it comes to accounting. It's a necessary evil. It doesn't help. There's been a lot of reasons why we've already covered, but that thinking is really the key to this whole thing. So if you're drowning, don't blame the water. Feel free to use that. I think it's a fun quote to just drop on people. So you have to be motivated. So I go back to this image because it's kind of the quintessential, example of accounting and why the thinking is off. Because, like, if I'm motivated by this webinar and saying, I want to start having more cash flow and driving my cash flow, and I want things to be better, and I start, accepting credit cards and, tracking things, if I don't change my thought pattern and be motivated, it's never going to happen. If I still treat accounting as this thing that I don't understand, that makes no sense to me, and that I don't care about, chances are nothing's going to change. And so you have to be motivated to do it. And I hope, of all the things that we've talked about today, there's some tactical and practical things that you've taken away, but I hope also that you've taken away a kind of a hunger to be better at this and to understand it. And again, without being a financial expert, but to know what's going on in your own firm so that you can build a system to grow. This is a great quote by football coach Tony Dungy. He says, champions don't do extraordinary things. They do ordinary things, but they do them without thinking. Too fast for the other team to react. They follow the habits they've learned. So this is going back to, we have to build the habits to succeed. And the idea of having a financial system that works, it's not a heroic effort that has to be this huge headache. It's, simplifying the system, building practices, and building momentum that is simplified and that works. And then once you have those habits, it happens without thinking. It's not this big, like, the people that have this in place aren't devoting a ton of time to it. They've just changed their approach to it. So what does a financial pro look like, and what do they think like? And this is really where the culmination of everything we've talked about so far. What happens when you simplify and create that simplified financial system, when you have that focus on the things that matter, the 3 to 5 key levers. So a financial pro is goal-oriented. So everything they do, they know where they want to go. They don't always hit every goal. They don't always, decide where they want to go and make it happen, but they're always thinking about it. They're always projecting a vision into the future, and they're looking forward. They're also focused on the cash. You look at successful entrepreneurs, successful law firms, successful businesses, a very good amount of them are focusing on the cash because they know that's the lifeblood of the business. They know if something happens, it's going to throw everything off, and they know that the cash drives everything. And so that they're relentlessly focusing on that. And even if it's not them, they have someone that's in their ear that is focusing on the cash. But it's impossible to build a long-term, successful, thriving business with confidence. Like, you can build it, but you're always going to kind of have this nagging in the back of your head that you don't have that confidence. To have it with confidence equals you are focusing on the cash. Then you get into the behavior. So you think like a financial pro, and you desire these things. You think you're goal-oriented. You're making iterations and changes. You're looking forward. You're focusing on the cash. This is kind of your thought pattern, your thought process when it comes to your financials. Your behavior is you have financial reports on demand. You build a forecast tied to your goals. You have regular check-ins and adjustments. You have a regular cycle with your accounting, not just once a year, not just every quarter. How did I do last quarter? How did I do last year? That you're doing this regularly. You're getting it on demand. You're building towards your goals, and you're making this happen. The numbers become part of your routine for the savvy business owner. This is the action. This is the behavior of what financial pros do. They get the money in the door. They get the invoices out the door. They make these things happen because they've changed their thought process to know that they're focusing on cash, focusing on their goals, they're focusing on looking forward. And then they change their attitude to match that thought process. So what do you do now? We've covered a lot of ground. We've covered how to simplify and what a perfect accounting system looks like. We've talked about how to focus and develop your key drivers and to map towards your goal. So what happens now? What decisions can you make in the short term to move forward? I'm going to recommend first and foremost to be brutally honest about your current situation. And so we've covered this ground, and I want you to know, and this is where I'll sound a little bit, like psychological, but you're not alone. Like if you feel like, man, this is so embarrassing, my accounting's a mess, or maybe your accounting is not in bad shape. I act like everyone has a mess. That's not true. Some people have pretty organized accounting, but they're just too entangled in it that it becomes a mess or it becomes a huge headache because they're dealing with it so much. Whatever the case may be, this is extremely common. Like most law firms are dealing with the same exact thing, but you personally have to be brutally honest about your current situation and where it is. And is it serving you? Is it serving your purpose in what you're trying to do? The second thing to do is think about where do you want to go? And be honest about that too. Where do I want to be a year from now? As we approach the end of this year, like what do I want the end of the year to look like? What do I want tax time to look like? And clearly define it so that you can have a clear picture in your head about who you are, where you want to go. And then the behavior and the decisions and the things will kind of take care of themselves. You can find ways to do that. And I'm going to talk to you at the end about how we're happy to provide more information about other things that we've seen work and things that you can do. But it is attainable. It is something you can do. But changing, getting real with where you are now, getting real with where you want to go are the key points first and foremost. And then I'll add to that, like get the cash flow in the door. So I can get you these slides afterwards. And so go to that slide about what to do about cash flow and start getting it in the door. That's something you can do right away to start being a financial pro. So that's all I have. I know we're going to take some time for questions, but I also want to offer, we're doing Kahuna Accounting. We have these conversations every day. And so if you go to this link, kahunaaccounting.com/law, you can fill out the form and schedule an appointment with someone from our team, an expert, and we'll be happy to kind of do an assessment of where you are and help you kind of get clarity as it applies to you specifically and some of the things you can do to get this, solid financial system in place. So I invite you to go there, check that out, and feel free to schedule time. We'd be happy to kind of diagnose and go through what's going on in your firm and talk through it. But I think we may have some questions, so I will stick around and I'm happy to answer any that you may have.
Awesome. Well, thank you so much, Micky. That was a lot of really, really great information. And I think that, as all of us head into Q4 and start thinking about how we can end this year well and set ourselves up for success in 2018, this is a lot of really great, tangible stuff that, not just lawyers, but businesses of all types, I think, can really benefit from. We are going to take a few minutes for some questions, and we've actually already had a few come in, so feel free to add more to the queue. We'll be going through, but we have a question from Claire for you, Micky, that says, what is a good rule of thumb for months of required operating cash on hand? This person remembers Bill Gates once saying that Microsoft had 2 years of cash on hand, but for a law firm, maybe a smaller solo practice, do you have a rule of thumb that you like to advise people on for cash on hand?
I don't, because I think it's very relative, and I am not the financial expert, so I am the voice of the financial experts. I have heard said 6 months is kind of a great place to be. Like once you can get to 6 months, you're in good shape but I'm not going to give you like a hard and fast rule. But I think for a lot of people, it's, starting to just be aware, of where you are now and start to work on building that up. And I think 6 months is a good target. Like if you can get to that, you can start to feel pretty good about, having a strong foundation in place that you can keep growing on. 2 years would be really, really good, but Bill Gates he's pretty smart.
That's great. We also have a question. We've got a lot of really good short-term and long-term kind of suggestions from this presentation. Like we said, we're in Q4 right now. What are some things that you can pull out, either that you've already addressed, or that, you hadn't mentioned, that you think could really make a difference before the end of the year, just that people might be able to see even small changes before 2017 is wrapped up?
Oh yeah, that's a great one. So number one is go look at what I said about bringing in cash flow. So that's something you can do right away. That's going to help you just bring more money into the business before the end of the year. You don't have to write all these things off. You can start to collect. The other thing is, now is the time to look at getting yourself organized. So I know what happens for a lot of firms is they kind of hit a lull in, I don't know, May, like the summer months. It seems like accounting goes out the window. And so we have a lot of conversations with people who said, yeah, I was, keeping myself organized and reconciled, and really kind of dropped the ball like from May on. And so things started to get a little bit of a mess. Don't wait until the end of the year or until after the new year and then take the shoebox to the CPA. Start to work through that now. Have someone help you. Talk to us about how you can get that organized. But now is a better time. Trust me. Like if you can start to get it organized now, I think it's the best case scenario. When we talk about that pain of tax season, the best case scenario to be in is to hit December 31st and have your entire year wrapped up. And so when you get to January 1st, you have your reports that are just there. And so then when you have the conversation with your CPA, this is how the conversation can go. When you have the system in place, they'll say, it's time for taxes. These are the documents I need, and boom, you just provide them. Like, can you imagine that? Like how fun that would be? That's what businesses do that have this organized. And so now is the time where you can start to organize everything, get the year taken care of and closed out, so that you don't have to, once you get to January, be picking through months and months of transactions trying to figure out what happened.
That's great. I think that we've got a couple of more questions that are pretty specific that we're actually going to pass along to you to let you deal with kind of one-on-one. And so I think for our webinar, we're coming right up on one, and we are going to wrap this up. So thank you again to Micky for joining us and for leading this conversation. As you can see on our screen right now, he's got his email there, Micky with no E. So shoot him an email if you've got more questions. And we're recording this, so we'll try to make this recording available. We had a few people ask that question. So thank you guys so much for spending your Wednesday lunch with us. And we're going to be back next week with another webinar specifically about trust accounting compliance. So if you haven't had a chance to register for that, be on the lookout for more links for that. And we're excited to help everybody have a strong Q4 of 2017. So thank you all so much. And thanks again, Micky.
Thanks a lot. That was a lot of fun.
All right. Bye, everybody.